Over 300 real estate stakeholders from Africa and other parts of the world were in Nairobi this month for the East Africa Property Investment Summit. Now, the event is devoted to driving investment and development in the East African real estate sector and also setting the agenda for the region. Well, this year, with the theme A Renewed Focus, delegates discussed topics such as unlocking development funding, as well as the outlook for not just market fundamentals, but also urban development for the future. Well, of course, this year's summit was sponsored by Pan-African lender ABSA Group. And let's now discuss the key outcomes at this year's event further with Somaya Joshua. She's the head of Commercial Property Finance for Africa Regional Operations at the ABSA Group. Great to have you with us on the show today, Somaya. Now, of course, we know the region has gone through quite a period of economic turbulence in light of the COVID-19 pandemic, in light of the more recent Russia-Ukraine conflict. Now, analysts are saying, despite this, the East Africa property sector seems to be thriving. They say investors are actually showing a preference for land and housing as opposed to other asset classes. So what are your impressions of investor appetite as a bank that provides property financing? What do you think the appetite is for property assets, especially in the East African region?
Thank you, Buche. So we're still seeing a lot of optimism in the region, particularly insofar as our debt funding position has been concerned. So where are the sweet spots really is, it really, from an East Africa perspective, we've seen that there's still interest across the various subsectors of real estate. I think where the darlings are sitting right now is probably in asset classes like light industrial, affordable housing, in fact, housing on a more broad basis, and affordable particularly because, you know, that's driven by the level of pent-up demand that we're seeing in the system. And then we're also seeing a lot of, especially coming out of the conference, a lot of conversation around student accommodation, and that seems to be quite a keen one to watch at the moment.
Well, ABSA itself is quite active in property financing across Africa, but also in the region. We also know you're founding shareholder of the Kenya Mortgage Refinance Company and an active participant in financing projects under the Affordable Housing Program. So in light of all of this, what particular segments is the bank itself interested in?
Okay, thank you. So the bank has been focused on all the different subsectors, and we've been actively funding across the various subsectors in real estate, whether it is offices in Tanzania, retail in Uganda, and more specifically in Kenya, where we funded across retail, offices, warehousing, housing. Now, what we think we're going to get some more momentum, and we're looking forward to seeing more opportunities around is light industrial, is affordable housing, and again, is student accommodation. We think that there seems to be a lot more appetite for student accommodation, especially, as well as for affordable housing, in fact, and that's really driven by, you know, just the lack of housing in the likes of Kenya. So we would particularly like to continue to support that sector with debt funding. But like I said, we've been quite active across the sector. We have not, and we've continued to lend and extend our balance sheet in spite of the COVID disruptions that we've seen. We've continued to have quite a balanced perspective on how it is that we're putting debt out across various sectors.
Right. And certainly that's all positive. But looking forward, the theme of this year's summit was a renewed focus. So how is the industry sort of renewing its focus going forward, especially when you factor in the current market fundamentals and, of course, the future for urban development in Africa?
Right. So there's a couple of things. The first is, you know, from a bank that looks at how it is that we facilitate client strategies and really enable client strategies, especially in real estate, which is quite a long-term play and does expect a level of patient capital. We're seeing that the innovation that's coming into the sector has a lot to do with even how from a funding perspective, we're showing up with, I want to say, a little bit more of a flexible funding proposition for our clients. Likewise, clients are thinking about their businesses in a much more innovative basis, or on a much more innovative perspective, in that, when you think about property traditionally, what we're starting to see is the innovation is coming insofar as how it is that we adopt ESG principles. We're also seeing, that debt equity combination look a bit differently. And we're seeing debt funders responding by really adjusting vanilla funding approaches and looking to understand, where does the cash flow, how does the cash flows behave, and what's the best debt structure to put in that looks a little bit more bespoke, and moves away from, what we like to call the traditional lending structures. And I think that's positive because, the pandemic has taught us a couple of lessons. But I guess the biggest lesson, and on a more optimistic basis, is that real estate has not been a sector that sees the cash flow go down to zero, right? Where we've seen disruptions, that's actually amplified innovation in what's the new product that investors are looking at. And what I mean by that is, suddenly you would see that, if we want to call it sectors that traditionally would be the flavor of the month, that had experienced disruptions, whilst we tried to maintain value in those assets, you suddenly started to see a lot more interest in newer asset classes like warehousing, that's driven by e-commerce and what the pandemic meant for us, insofar as online shopping is concerned. You're then also seeing new asset classes like data centers, and we think that those changes, the disruption that's happened in the sector has actually, disruption has been amplified in that developers, investors, funders are starting to see new asset classes emerge in the likes of light industrial again, and data centers, and what the pandemic has meant for us from a housing perspective. For a while, we've been saying that this pandemic has run the risk to take a housing crisis and almost morph it into somewhat of a health crisis, right? And so we think that there is amplified energy, and what's come out of the conference is a lot of conversation about how it is that we actually start to take the right housing product to the market, and what changes need to start to happen to get that product delivered at the right price point that's affordable for the offtake, but that's also profitable for a private developer.
Well, that's certainly quite exciting, the disruption that you're talking about that's going on in the sector. We do have to leave it there, Somaya, but thank you so much for those great insights on the show today. That, of course, is Somaya Joshua. She is the head of commercial property finance at the ABSA Group.